Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about the three stocks that I'm watching this week. Those three stocks are Alibaba Stock, ticker symbol BABA, Virgin Galactic Stock, ticker symbol SPCE, and lastly Bitcoin. So now let's get started. So here we are in Alibaba Stock, the Chinese e-commerce company. We can see here in Google that we are down about 9% in about a month. And if we look here at the trading charts, we can see that the real reason why I'm watching the stock this week is because we are actually in a very interesting spot technically here. We are in kind of a tipping point. We are in a pretty well-defined downtrend ever since our highs back in October. We can see here that we have been hitting lower highs, and we are actually at a spot where we are also at a major support level here, around the $210 level. So this is sometimes called a descending wedge here by some technical analysts. We can see here if we draw a line from our downtrend, we can see that that downtrend line intersects our horizontal support level here around the $210 level. So to some technical analysts, this is a very interesting tipping point because when we come to some formations like this, the resolution after we hit this triangular point here is important to tell short term how the stock will behave. If we see that Alibaba stock resolves a triangle downwards, then that could be bad news technically for the stock and for shareholders of Alibaba short term. However, if we resolve upwards here, then we could be back to waving out in this range between 210 and 240-ish. So basically, I'm watching the stock this week to see how Alibaba will resolve this triangle. I think if I wanted to add more to my position, then here would be a fine place to either start or slowly add to a position. Either way, I believe that I will still continue to pick up shares slowly over time because I do believe in the company's fundamental growth rate long term, no matter what the technicals are. But the technicals should be considered. So speaking of fundamentals here, if we look at Alibaba's most recent earnings report, we can see that we're actually seeing some fantastic revenue growth. We are seeing that year over year, revenue growth is growing by over 64%. And honestly, that is quite fantastic and very impressive, especially considering the size of Alibaba. Now, looking at the costs here, which I pulled up in this tab here, we can see that we are actually seeing some interesting numbers. And actually, there are some questions that are raised here. We actually see that the total costs and expenses for running the business here is coming in at 104% of revenues here in the most recent quarter. So basically what that's saying is that for the most recent quarter, we're actually reporting a net loss. And for a company like Alibaba, who has been pretty consistent, this is actually a little surprising until you look where the money is spent. If we look at the detailed view here, which is all these categories in here, we can see that general and administrative is really coming up at around 7%. So do note this is percent of revenue year over year change. So this isn't really absolute or relative percentage points. So this 7% here is almost doubling the percent increase in the other categories here. And that raises some questions on why are we spending so much on general and administrative? Well, if we look down here at the explanation of general and administrative, which I pull up in this tab over here, we can see that this increase in general and administrative spending was primarily due to the anti-monopoly fines and also paying for the lawyers and everything. So this is definitely something that investors should keep in mind before investing in Alibaba. Even though we are seeing very impressive growth rates and revenues year over year by over 60%, Alibaba is still in a tight spot with regulators. Even though I think the anti-monopoly fine was basically a slap on the wrist for Alibaba, international relations and regulatory risks are still very real risks that should be considered before investing. So after talking about Alibaba stock, now let's talk about Virgin Galactic stock. So here we are in Virgin Galactic stock, and we can see that Virgin Galactic has been quite on a run the past week, up over 30% in just a week. So this is likely in anticipation for Virgin Galactic's test flight on Saturday, May 22nd. And if we look down at the news here, because I'm recording on Saturday, May 22nd, we can see some positive news. We can see that Virgin Galactic was able to successfully complete its test flight. The reason why I'm watching the stock this week is because I want to use this stock's reaction as a gauge on retail investor interest. If we see a big pop upwards on the positive news, then that means retail investors are still very interested. So a lot of the momentum names in the stock market could come into a bullish trend again. Now, is this test flight actually big news? So to me, honestly, maybe. But again, these are just test flights. It's good to know that they're on the right track, but there's still quite a few steps between now and commercial flight, which Richard Branson is targeting for next year. But if we transition to the trading charts here, we can see that Virgin Galactic has been in a pretty strong downtrend here for the past few months, ever since early February. However, the excitement generated from the test flight here has kind of pushed the stock upwards. I think you could say that Galactic is very close to breaking this downtrend here. And if we see a few days of follow through to the upside, then I think we could see the stock returning to waving out between this $20 and maybe $30-ish range here. However, if we are unable to break this $20 resistance level on the positive news of the positive test flight, then we could either continue waving out between the $14 and $20 level, or we could continue the downtrend. Because of this, I would be pretty cautious at the $20 level here. I would want to get a better picture of which way Galactic will go before I commit any more capital to the company. So looking at the fundamentals of the company here, by looking at the most recent earnings report, we can see that the company, well, of course they're losing money on the net loss here, because we don't have a product. But if we look at year over year, we actually see that last year we were losing more money than we are this year, being the most recent quarter ending on March 31st, 2021. We can see that our losses are declining, and that's a good thing. However, if we look at the detailed view of what composes of this net loss number here, we see that there's a lot of things going on in this change in fair value of warrant. We can see that a majority of the change in net loss year over year is due to this change in fair value of the warrants. And honestly, I do not know what that is. They do not explain what this is in the earnings report. So to me, this is a yellow flag and tells me that we should do more digging to find out what this actually means. If we look at the operating loss here, which gives us a better picture of how the company is run, because it's only counting in sales, general, administrative, and research and development here, we can actually see that year over year, we are increasing our loss here. So, not really what I want to see, especially because most of this increase in spending is in sales, general, and administrative, and not in research and development. However, if we look at the balance sheet here, which I pulled up in this tab, we can see that there is still quite a few dollars in Virgin Galactic's bank account here. So that tells me that the company could still survive for a few quarters without the need for further funding. But again, in general, even though fundamentals are very important to a story, for Virgin Galactic, I think it's less so. Galactic is more of a momentum trade, which means that the technicals should be considered heavily when deciding to invest in this particular stock. The last thing I'm watching this week is Bitcoin, or cryptocurrencies in general. Obviously, there has been quite a bit of volatility going on with Bitcoin and the other cryptos this week, and that is why I'm watching them. Even though I do think cryptos will do quite well long term, I'm talking years out in the future, short term, we could see some volatility that will give me an indication on the general sentiment. I actually did my final paper from the statistics class that I'm taking at Harvard Extension School, and I think that Bitcoin, at least for the short to intermediate term, was correlated with the overall stock market. So the reason why I'm watching Bitcoin is to see if I can get a gauge on investor sentiment and to see if there will be an impact on the overall stock market if Bitcoin goes down further. And we can see here in Bitcoin's trading charts that we are actually in a pretty well-defined downtrend for the past week. And we actually broke through two major support levels, one around the $48,000 level and one around the $40,000 level here, made by these candles over here. So as I've said in my previous Bitcoin video, I do think that we will see the bottom of this candle over here around the $30,000 level again. So this is the first place where I would be looking to pick up some more fractional Bitcoin. Again, I'm dollar cost averaging my way into the cryptos because of the volatility. As Bitcoin and other cryptos go down, the more I'm able to buy and the more I feel comfortable buying with dollar cost averaging. So those were the 3 stocks that I'm watching this week. Let me know what you thought about it in the comment section down below. If you have any questions or if you got any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.